Hey, thanks for tuning in. We are going to talk about my predictions for the 2024 housing market. And before we do that, we need to talk about what happened in 2023 because you can't have a prediction about the future without knowing the past. So, 2023 was kind of an interesting market. Everybody who was following real estate, who was aware of what was going on, basically the housing market across the country was basically on a standstill, frozen over, as people might be saying. But this is more as a result of just the volume of transactions. Basically, across the board, volume of transactions were down around 30%. And if you want to compare this on a larger time frame, this is basically the lowest transaction volume in 30 years. That just means people aren't buying and selling as much. And you would think that if there wasn't a lot of transactions going on, possibly the price would be affected, but that was also not the case. Prices in general rose about 2.1% for the year. So not 10, 15, 20% like during COVID in 2020, 2021, 2022, but 2%, 3%, that's like an average appreciation you get on a normal year, maybe up to 4%. But prices really remained steady. You didn't have the action in terms of like lots of people going to listings that might not even be properly priced. It's just on the market. There's just been a really extreme lack of inventory across everywhere. All the markets, we cover New York, we cover New Jersey, we do Georgia, and we saw this everywhere. And I think that a big reason about this is, number one, is this comparison of interest rates in the last 3 years. Like we hit a peak in October and it was around 8% for interest rates for a 30-year fixed residential. Where if you compare that maybe 2 years ago, 3 years ago, people were getting 3, 3.2, 2.8, super low interest rates. And people locked into these mortgage rates now, even if they want to move and they have a lot of equity in their house, the trade-off of that interest rates, people are just married to it. So we're not seeing people, unless you have to move, there's a death, relocation, upsizing or downsizing, the optional mover is not moving as much. And then also commercial investors, when commercial, loans are 10, 12%, it changes their whole dynamic of what they want to invest in specifically for residential. If you're looking at, 9, 10, 11% versus 4, 5, 6, 7 for commercial. So it's really the interest rate. And for the residential primary home owners, which is what we mostly deal with, it's a trade-off of your monthly payment. I mean, you might have a lot of equity, but a 3% interest rate, people are either holding on to it and turning them into rentals. I've done other videos about the first time, a lot of these first-time landlords giving people suggestions because they got these good interest rates, they needed to move, they wanted to move, they got the primary ownership loan, so it's a really attractive deal. So they say, hey, this is going to be my first rental property. So more people are staying in homes, even if they're staying in homes if they don't want to move, and then they're staying with the homes they have and adding into their portfolio, where you have a whole new group of home buyers who had no interest in being a landlord, but they're saying, hey, we're making $500 to $1,000 in cash flow on this house that'll help us with our next house, monthly expenses. So it's a really attractive. For residential homeowners. And then a lot of people also taking the equity out of that house, keeping it as a rental, putting it into the next one. So we have this little poison pill in the market where it's new buyers are kind of hesitant of the high rates. Old buyers or sellers who would be buyers want to stick to theirs. So it's creating just a dynamic where there's just not a lot of transactions. And I think forget where I was reading it, but it's something like 90% of mortgages have rates under 4 or 5%. So if you think about that, you have the whole generation of people who have their homes paid off free and clear. And then you have this new generation who may have just bought in the last couple of years, last decade, and they all have sub 5, sub 6 interest rates. So that is definitely the poison pill, not moving the market. But my predictions for the future moving forward is we've seen a lot of new buyers or buyers that were on the sidelines come to market in the last 30 to 90 days. So basically in October, we had a peak. And then now we're in the mid sixes again. This is January 2024. December, similar-ish situation. So this isn't going to incentivize homeowners to sell who have to sell, buyers who are on the sidelines. So we were at open houses this weekend, and it was a rainy Sunday, and it was cold, and 4 of the 5 open houses I went to had more than 4 groups at them at the same time. So there's definitely positivity for the buyers in that regard. And then obviously moving out into the new year, people always take 2 weeks, 3 weeks, get their personal life sorted, and then they start thinking about let's buy or sell or move now, or even thinking about the projected move in the spring or the summer. So I think we're going to see more transactions come because people are going to be more willing to sell and move. And then you're going to get the COVID buyers or people who held off who really have to move now. Upgrading, downsizing, relocation, you name it. And you're also going to have people who are saying, hey, maybe it's a time to cash out on our equity. So I think we're going to have more transactions. I don't think the prices are going to go down that much. A lot of people, I'm seeing all these YouTube videos of people saying that it's going to go down, there's going to be a crash. I don't think that's going to happen. I definitely think buyers are going to have negotiability because we are seeing more days on market, but I don't really see the price depreciation that much. You're always going to have micro markets of certain cities and certain states and certain types of inventory. When there's regulations change, like for instance, 2 years ago in New York, rent regulation change, or 3 years ago, and people aren't really transacting in those buildings anymore because you can't make the capital improvements. You could see this, I could see this happening in towns in Colorado for Airbnb laws where everybody was so hyped up on the Airbnb train. You're going to get some towns to protect their locals are going to say, hey, you can only Airbnb for X amount of time, or you can only Airbnb in this area, certain having like long-term stipulations with it, like Nantucket, big beach community in Massachusetts on a beautiful island. There's been several pushes to try to eliminate the short-term rentals. Like instead of doing a weekend, maybe it's a week or 2 weeks, or it has to be a whole month. Things like this. I think that's definitely going to happen. I mean, that happened in New York already with the Airbnb market. And then you're going to get people who I really do believe is that, well, I've already seen it. People who did the COVID move. So they either went to the suburbs, they went out of a city, they were remote, and now they have more days back in the office, or they decided to move all the way out to the country and realized that it's a lot of work owning a house and they'd rather live in an apartment. So I think you're definitely going to get that factor. I think is going to be the number one thing we're going to see in the market because, we are 3 years or whatever out of the thing that happened that took over the world. And that's a time where it's moving on. It's election season is coming up. I really do think that they try to boost the economy leading up to the election, and then sometimes the negative headlines take over once the fall comes around, which is typically at the tail end of the residential season in a lot of areas anyways. So those are my predictions. I think we're going to have more transactions. I think prices are going to pretty much stay the same, if not keep on increasing a little bit. I think that interest rates are going to come down slightly, but not. Maybe they'll get below 5. I don't think they're going. I think they're going to stay in the 6s, 5s. And then what was the last one I was going to say? I should probably script these out a little bit better, but I think we're going to have just more transactions in general. There's not going to be any fallout in the pricing. I don't believe. Hey, listen, you clip me later and say I was completely wrong, but we're definitely going to have a busy season this year. So if you're looking, you're interested, let me know. We can send you a personal market report or a buyer's guides to help you in the process. Like and subscribe to the videos if you like. Have a good day.